Good morning, this is Kathy and this is the pre-market analysis for Friday, June 27th. All right, yes, it's in between opposing emerging patterns and they are not in sync. So initially want to see where price is in relation to this golden ratio zone between 44.75 and 41.50. There's so wherever it breaks out of there first will give us our first clue which line in the sand level has a higher probability of being tested. Below 41.50, next target is 36.25, and a breakdown there has the ideal target down here at the 1922.35. I'm sorry, 50. Of course, it could breach it to test the double bottom. If it breaks down there, then the extended target is 1891.25. But first things first, if it holds above the golden ratio zone, then the implication is it's going to try to complete this small butterfly. Initially, the initial resistance is going to be 49.50. A push above 1952.25 is going to change this triangle point over just a little bit, but it will not change the dynamic of the pattern. So anything above there has, if it breaches 53.25, the ideal target is 1957, call it 1958. Now this is a scenario to where both patterns can play out. They will be in sync if this bearish butterfly completes first and goes into retracement mode. Profile wise, upside continuation, if it takes out that big line in the sand 1960, there's a double bearish Pier Z in the 1963.75 to 1967 zone. Alright, profile wise, yesterday was a double distribution, but seeking lower back to the value where the expansion day occurred. So yesterday, the previous 2 days have done a great job of filling in the imbalance from 1951.50 to 1943.50 area. So now that the balancing is complete, we either need to seek new value anyway, need to break out of this area of acceptance. So that would mean a hold below this yellow zone, namely below this 1938 area, or a hold first above 1953, but more important above 1960. There is potential chop between 49.25 and 43.25, but let's see, price is currently at 1944.75, so we're still in this region here. Let's see, let me look at the visual. All right, it has done, during Globex session, it's done a great job of filling in that imbalance. This is a regular session only, so we'll see if that continues during regular trading hours. If not, look for a break of yesterday's high and low. CL, also in between non-in sync opposing emerging patterns. First want to see, can it break, which direction is it going to break out of this golden ratio zone? A little bit of upside bias at this juncture, but with divergence. So I'd want to see it either hold above 106.14 or hold below 105.71 to get a higher probability of directional bias. Now there is a trend line. Now as long as price holds below this trend line, the probability of this bullish deep crab keeps high, but once price is holding above it, it decreases the probability of that particular pattern playing out, and it focuses more on completion of this Scion pattern. So ideal target is going to be this double top 107.50, but there's definitely potential rejection points at each one of these Scion fibs. Okay, profile wise, yesterday was kind of balanced. It's still in a big sideways range. Until it can hold below 105.14 or above 107.02, it's really just in a sideways range. And there's like a triple POC here in the composite. So currently the value is just trading points of interest along those lines. Currently price is at 105.82, so price is currently holding around yesterday's VPOC and I'm looking because that's not clear. Yeah, it's the VPOC. So not ready for initiative participations to step in yet. So want to see it hold beyond yesterday's high and low. Otherwise, it's just has some choppy business between these composite high volume nodes. I feel like I'm talking in slow motion. Okay, NQ. In between opposing emerging patterns. Now I'm going to show the volume profile first because it's very simply put. The last two sessions during regular trading hours are inside that expansion day, right? So that's a clear triangular type formation. So it's kind of still holding its breath, even though the ranges have been decent, right? All right, so here's what it looks like harmonically speaking. And of course, we're in between opposing emerging patterns. The larger line in the sand levels to break and hold are 38.27, or call it 38.28, or 37.81.25. But for now, price is really in between another two small emerging patterns. And I did not draw the triangle for one of them, but I wrote it in gray. So initially, I want to see how this ideal minimum retracement of this small bearish bat behaves, because it's stalling there, right? It's attempting to invalidate a bullish cross. So this 38.08.25 is an important support test. As long as it holds above there, it's either going to be in a sideways range or it's going to attempt to push above this significant line in the sand, the blue one at 38.28, and above there has high confluence at the 38.57 area with definite scaling point at the 38.45 region. As long as price holds below that 38.28, we're still in a sideways range. We're still in between several opposing emerging patterns, and we'll look for first this line in the sand 37.89 to be tested. Now, if it breaks down the golden ratio zone first, the ideal target is 37.92.50, and that could cause it to find enough buyers to push it on up. Otherwise, if it breaks down these significant line in the sand levels, then my focus would go to this 37.54.25 region. Okay, already showed you the contraction mode. Even though they're expanded, it is consolidating inside of a range, right? And the focal point is this 37.91.75, and until price can hold beyond these yellow zones, the implication is it will continue to fall back into interest at that 91.25. All right. DAX is currently attempting to go into retracement mode after completing a bullish butterfly, needs to get above this trend line to increase the probability of completing these harmonic PRZs, or these harmonic patterns at the PRZs as noted in brown. Okay. Otherwise, as long as it holds below this trend line, the implication is a retest of the bullish butterfly PRZ 97.51.25 is the extreme. A breakdown there has the extended target of 96.99. TF is in between opposing emerging patterns, and so I want to see it hold beyond one of these significant line in the sand levels, 1179.3, or there is a line in the sand level here at this large significant level for the blue pattern. Everything is always color coordinated, so if a line in the sand is breached, if it goes below 1156.4, everything in blue is removed off my chart. Okay. All right. So right now, price is currently holding above this GRZ level 1170.6. As long as it does, it implies a retest of 1179.3, and that becomes a very important level, because if it goes above it, everything in gray gets erased. And focus on completing the blue pattern at 1193.8 to 1198.5. Definite point of interest 1189.5, because that's a double top and another significant line in the sand. A hold below the golden ratio zone could complete this Gartley first at 1161.3. Depends on how price behaves there, because it could keep it in this consolidation in between several opposing emerging patterns, right? It's not until it takes out 1156.4 would it invalidate one of those opposing patterns. And focus on double PRZ down here at 1142. Scaling points, as noted, if I have a fib, especially with notation on it, those are definite scaling points. Okay, and 6E, in between opposing emerging patterns on multiple levels. So initially want to see how does price behave within the golden ratio zone. As long as it's inside the golden ratio zone, it implies contraction or indecision. Once it's beyond, then it gives us a better directional bias as to which opposing pattern has a higher probability of working out. Significant lines in the sand levels to break and hold 3656 and 3579. Once that occurs, then the PRZ targets have higher probability in that direction. All right, that's it. Have a great day and a great weekend.